Hello, ladies and gentlemen. Greg McCloskey from Forex Live. I'm going to take a quick look around some of the major currency pairs as we end August 1st and move into August 2nd. Let's start by taking a look at the Euro versus US dollar. I want to point out the key support on the downside. That level is defined by this area right through here. We had a number of different swing highs which formed the ceiling. Then it became a swing low or floor right through here before moving to the upside. The price returned back to that area in trading on Friday and bounced off that level where the market found resistance against the 100-hour moving average. We did move above the 100-hour moving average yesterday, but that was quickly thwarted and the price moved back to the downside. So anyway, this area right here is going to be our next key support, followed by the 100-day moving average. That's if the sellers take more control in this pair. On the top side, note here now the 61.8% retracement of the move up from the July low to the July high came in and held resistance at 1.10017. If the price is going to go higher, we need to get above that 61.8% retracement and then back above the 100-hour moving average. Once again, the price moved above it yesterday, but could not sustain the momentum above that level. So that would be the next target to get to and through. If we do that, then the 50% retracement at 200-hour moving average is on the top side. So right now we say we're between the 100-hour moving average and below the 100-day moving average below. Let's take a look at the sterling versus US dollar on the hourly chart. And what we can say about this currency pair, we'll follow this yellow area right through here. And I'm going to go back in time, go back in time, go back in time, go back in time to around here where the price started to use this area as a resistance level through here. This was a ceiling area here, 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 here. Got a little messy here before we started to move above and find support against the level before moving to the upside. Now let's fast forward to where we are in trading here today. And if we look at that level, the market came down to that level and found support buyers at the low of that level. Recall from Friday, the price also held support against the high of that area. So the 127.38 up to 127.59 level is going to be a key support level. If the price is able to get below that level, we'll look toward this swing area down here between 126.81 and 126.98. On the top side, the 61.8% retracement, like the euro versus US dollar, is a level that we'll be watching. That's of the move up from the end of June low to the July high. Get above that level, and traders would start to look toward this swing area and also the declining 100 and 200-hour moving averages, which are near converged at 128.56 and moving lower. So that would be the targets on the downside. So get above the 61.8, move toward the 100, 200. Get below the 1.2738 level and look toward 126.815 to 96 on the downside. Let's take a look at the dollar versus yen next. This currency pair has moved higher. Rates have moved higher, and that has forced the price to the upside here, which is traditionally what happens. The high price did reach our next target area, I guess, against this swing area right through here, where we just had swing lows right here, which became swing highs right through here before the market rotated to the downside. It's just subtle, and it's 2 days of support and resistance through here, but it is effective as the price high came up to that area, not once but twice. And we are trying to put a lid on that pair. As long as the price can remain below 143.53, we could see a rotation back toward this 142.49 to 65 level on the downside. What's the importance of that level? If I go to the daily chart and if I look at the 61.8% retracement, that's at the 49 level. If I look at the 65 level, that's the high of this swing area. Going back in time, this level was defined by swing highs through here, swing high, swing high. Then we came back up to that level in June and moved to the upside and used that as support. And then we moved below it in July and we moved back to it in trading yesterday. So get below the 65 level, get below the 49 level, and we'll take care of the 23 level on the downside, which is the low of this swing area. That opens up the door to the downside in the dollar versus yen. Going back to the hourly chart on the top side, if we break above this 44 to 54 level, we're going to look toward this area right here, 144.12 to 140.22. That level corresponds with a number of different swing lows right here, which formed a floor area as the market consolidated over this 5, 6, 7 sort of days before moving to the downside. That area comes between 144.12 and 144.22. Keep that level in mind on further upside momentum. Let's take a look at the dollar versus Canada today. this pair, this is a 4-hour chart, moved sharply to the upside, and in doing so, the price moved to and through what I have as a resistance and resistance target defined by a number of different swing lows through here, and then became resistance through here. You get the point through here, and then support through here. Got a little messy through here, but then reestablished before moving to the downside. We returned to that area, moved a little bit above it, but fell short of the 38.2% retracement of the move down from this high, which goes all the way back to May to the low price here. That level comes in at 133.06. If we get above the 133.06, it opens up the door for further upside potential with the 50% retracement, a possible target. If we end up holding and not being able to get above the 38.2% retracement, moving back below the 132.71 level would open the door for further corrective moves to the downside. Finally, let's take a look at the Aussie versus US dollar. This is the hourly chart, and the Reserve Bank of Australia kept rates unchanged last night, and that sent the Aussie versus US dollar sharply to the downside in trading here today. Having said that, the low price for today stalled near the low price from June and July. These are those. These are the. Let me get the arrows. These are the lows from the June period through here, and this is a low from July. This level comes between 0.6594 and 0.6603, and our low price, as you can see in trading here today, stalled between those two levels. If we break below the 0.6594 level, it would open the door for further downside momentum. If we're able to move higher and stay above this the 0.6622 level, we look for this swing area through here. Lots of different lows and highs off the extremes here that formed a base before moving to the upside back here. So that getting above that level would be more bullish and give the dip buyer some hope that the low is in place and we have the potential to correct further to the upside. So that's a look at 4 or 5 of the different major currency pairs. My name is Greg Mikulowski. Good fortune as you're trading in the new trading day. Bye-bye now.